Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Welcome to this daily intraday review. Today is April the 12th, 2018, and it's 8:35 p.m. EST time in Toronto. This video is also part of the FibStalker Analysis and Trading Service. As usual, I ask you to pause and review the disclaimer. Past performance is not indicative of future results. And trading Forex and other markets, leveraged markets, carries a high level of risk and may not be suitable for all investors. Okay, so please read and accept the disclaimer here. Very good. So let's dive into the market. We'll start from the SP 500, which is what you see on the screen. Nothing has changed. We have this level here, the 2668, that is still holding. I'm talking about the extension short here from these lows here to new lows. And this has been holding since a few days here, 2668. So what we are looking for here is a reversal and a continuation lower into this range, and potentially even lower into one of these two levels that we identified in the past, 2482 and 2530 level. All right. So next is the dollar index. We got that bounce, and not from the two levels we were looking for, but from the which are the ones that I have here on the screen. You remember the extension, the two 50% and extension here, but the market came to and bounced off the 50% from lows to highs within this large range here, the range where this market could be turning. The important development here is the fact that this level that held before then has not held, and now started holding here, and some people might invoke a reverse head and shoulder here, but we don't look at this kind of formation. We have the area very clearly where this market has bounced. Now we need to see whether this bounce can continue, and this would be possibly and probably the completion of this long running reversal here. These formations are always continuation or reversal formations. We don't know that yet. This wedge here might suggest a continuation higher, but nothing is given. So we will wait, and we will make sure that the market tells us what's going on. Gold and silver are suggesting, only today though, have suggested a potential retest for gold of the 1311 here, which would be the level that we are watching since a few weeks. And if the dollar index continues lower, we should see this level being retested again. The inner move here, lows to highs, has failed, and this would suggest that if the 50% do not hold, this would suggest a retest of 1310. Silver, same situation here. We also saw that weakness. So from a large point of view, nothing has changed in this market. That it's not very interesting at the moment because it's really a nonsense lateral move. So let's start then with the majors, and there was a discussion in the room in relation to which is the right trace in this market. So again, let me confirm that the right trace is the first trace here, which we will keep using to identify the price structure. Now what happened here is that this has traded, the market took many days, but eventually it hit that first target there. So we're seeing this rotation here, which would actually bring price into the next measured move. So we're going to apply rules, and that's the 78.15 is the level that we should see working here. Euro dollar, we got a retrace not from the levels we had indicated. Those levels were never respected. We had two levels here. One was the highs to lows, and that level actually, sorry, that level was respected here and was capable of bringing down the price. Now you know, this is still a lateral move here. We'll need to see where this market can be brought. There's a lot of dump money below price here, still supporting this price, so we have to be careful in this market. All right, the pound versus US dollar, it has seen strength trading at 50%, and that continues. So even if the dollar index is rotating here, we would not anticipate a move lower in this market. It keeps moving higher, you know, despite weakness in other markets as well. So the first target is 143.69, and it's there very clearly set, and that's where this market could go to, and that's what we're looking for in this market. Okay, that's the area. The 43.69 is where we're going to see this market moving to. US dollar, Canadian dollar. The US dollar, Canadian dollar, we keep seeing this weakness. This weakness is all justified by the sequence of measured moves on the larger time frame. You remember that this market traded the highs to lows, and it's pushing lower. The market did not make into that first target yet, but at some point the next measured move within this move came into play, and that's what's pushing this price lower at the moment. Because of that, the levels that we have to watch are the targets, of course, of these two measured moves, as well as the 50% long that came into play. That could be retested at this point, and any retraces in this market would be opportunity to sell this market. Okay, so very weak market has not offered you know, a lot of opportunities for continuation here. What we saw and has traded is the extension short, so very clear here. The opportunity were not a lot, but the opportunity given were clear. This extension also lined up with extensions also lined up with the larger 50% that we see on the weekly. That's the 129.29, and we're pressing to that first and second target. So if we have eventually a retrace in this market, we have to look for a short at the lows to lows, and at the moment that level, so I'm going to remove the previous one, that level is 126.78. okay, whenever these levels are tested, we then need to use a timing technique like FibStalker timing in order to make sure that there is participation before we get involved. All right, so US dollar Swiss franc, US dollar Swiss franc, yes, is the next market, very technical market. We saw that move higher as anticipated in this market. This market has been very, very technical recently, and that's the kind of move that we love and look for. The sequence here was very clean, 50% from the lows. The 93.39 has traded, bringing price into the first target. Before doing that, an inner measure move has also played here. Okay, and that was the lows to highs. Don't get confused here. When we have these inner measure moves, the first target of the larger move is the relevant one, is the most important one. Don't get confused if there are other targets close to those, because then the next measured move becomes the lows to highs. Okay, very, very important. If you're analyzing this market, if you are a student of the FibStalker coaching program, that's what you should be doing. And here, again, we saw participation at the 50%, first target hit, the next measured move has traded, as we can see here. And it has targets above. The target would be the first target of the move here. And because the 50% has traded, I'm going to remove this. So very, very clean here. There was a nice move today on Thursday, and at the open on Friday here we see potential continuation, but you should not be surprised if this market gives another throwback before he gets to the first target. Okay, so don't be scared if something like that happens here, because you know it happens in the past, it happened in the past as well, and it's always possible. So don't let that market behavior, especially here now that you have a risk-free trade, don't let that sway you from a good position that has a high probability of going to target. All right, so the next is going to be US dollar Japanese yen. This market also has been relatively strong here. We saw a potential retest of this level 106.56, 106.61. It's 5 pips, so that has formally traded here, and this is an inner measure move, very much like the inner measure move that we just saw on the US dollar Swiss franc, and that has targets above. There is the inner measure move target that is above the larger measure move target, which is very, very close. Now what I want you to know, which is this one. Now what I want you to note here is that this price is also very close to a potential extension short, and the Japanese yen has been stronger over the board here. And when we look at the sequence of measure move particularly, it's better to see that on the weekly time frame here. What we see is that there is no specific reason for this market to move higher. In fact, this market has previous resistance here. But most importantly for us, because we don't trade support and resistance, is the extension short. And this extension short, if it comes into play and lines up with the resistance here, and we find participation, then look at the beauty of this move and how first and second target are line up with the potential participation on the larger time frame. Okay, so that's what we see here. And that's what we have to look at for this kind of behavior here. All right. So the next market is New Zealand dollar US dollar, and in here, you know, we saw on the other hand a continuation of the move higher as we were anticipating. In this range, the 50% short has held, but not for long. And we saw the inner measure move that I showed you yesterday as well, trading here, bringing price into the first target, and there is a second target looming just above these prices, and that's likely to be reached as well. Okay, so after that we're going to use highs to model a continuation higher into the first target of the larger measure move. But remember that, never forget to do the full analysis. And remember that we have a 50% short just above these prices. So if we get there, we'll need to see what's going on there and whether weekly bears are going to show up or not. US dollar Singapore dollar, like for the dollar index, has totally reversed the move. And that's what we're seeing continuously in this market. We're seeing 50% trade, and then you know, a reversal on top of what? On top of a level now that we have learned it's very solid support level. And is this the last time that happens? We don't know. This has been a consistent behavior. There is descending triangle here that, according to the traditional technical analysis, is a potential a bullish development here. We're going to see whether that's the case. Of course, you know, that bullish case gains importance if 132.09 is pierced on the upside. So we'll see if that happens. And as you can see, there was a retest of that support in this strong move that was reversed at the open of the Friday bar here. And so that's certainly a bullish signal for this market. Okay, just two or three more markets to review here, which I believe are offering interesting move. One was the Euro Canadian dollar that has continued its move lower. We were looking and hoping for a retrace in this market, but that never happened. I got a short, so I'm short in this market, but you know, I'd like to get a better position. The first target for this market is the 149.70, 150 here. We're gonna see whether we get any kind of retraces, and maybe next week that retrace might come from a weekly trace here, and we will see if that's the case. Okay, another market I would like to comment is the euro pound. And this market has seen a strong move that is continuing, and finally, after many months, weeks and months here, we're finally seeing this market going to meet that first target. So that's not something that we were anticipating would take so much long time, although there is dump money below price, but we are getting there. And now that all these has been worked out, it should be easier for this market to keep moving lower, potentially even into the that second target. And if that happens, talking about the second target, 83.99, 83.99 here, if that happens, then we're gonna look for continuation shorts here. And finally, the other market I wanted to mention is the pound versus Canadian dollar, that also has pierced now, actually yesterday, has pierced that 50%, 61% level, which means that this market is firmly in control under the bear's influence here. And now I'm interested in looking at what kind of retrace we're gonna get in this market. If we get highs to lows here at 50%, so 81.12 is something to watch next week for any retraces and participation for a nice continuation lower. Okay, so this is it for this intraday review. Tomorrow is Friday, so it's going to be a lighter day. Don't get involved too much, even if you see setups, because those setups are likely going to play again on Mondays. All right, so thank you very much, and see you in the room. Bye bye now.